All right, let's get ready to rumble. Today, we are stepping into the financial ring for an absolute classic showdown between two investment heavyweights, gold and real estate. You know, people have used both for centuries to build wealth, but believe me, they play by completely different rules.
So, the big question is, which one of these legendary competitors is the right choice for you? Is it going to be the timeless allure of gold, that ultimate store of value? Or is it the solid, tangible foundation of real estate? Well, let's dig in and find out.
Okay, ding, ding, ding. Let's get into our first round, buying and selling. This is all about how easy it is to get into the game, and maybe more importantly, how quickly can you get your money out when you actually need it.
Right off the bat, there is a massive difference in what it costs just to get a ticket to the show. You can start investing in gold with just a few dollars, maybe buying a fraction of an ounce. Real estate, on the other hand, well, that demands a serious financial commitment. We're talking down payments, closing costs, and a whole lot more.
And what happens when you want to cash out? This is where a super important concept called liquidity comes into play. Gold is, hands down, one of the most liquid assets on the entire planet. You can sell it for cash almost anywhere, anytime, a lot of times on the very same day. Now, selling a property, now that's a different story. That process can take months, or honestly, sometimes even longer.
So the reason gold is so easy to trade is because its market is global, it's transparent, and it's totally standardized. I mean, an ounce of gold is an ounce of gold, whether you're in New York, London, or Tokyo, right? This global standard is what makes the pricing so straightforward and lets you invest in all sorts of ways, from physical bars to digital funds, and all of them are easily converted right back into cash. Real estate is pretty much the complete opposite. Every single property is unique. Its value depends entirely on its location, its condition, and what the local market is doing at that exact moment. There's no single global price, and finding a buyer at the price you want, well, that can be a complex dance that just takes time.
Okay, let's head into round two, and this is where we talk about what really matters, doesn't it? How do these assets actually put money back in your pocket? Because the strategies here are worlds apart. And here is the fundamental difference. Gold doesn't really produce anything. You make money with gold in pretty much one way. Its price goes up over time. Real estate, though, it has two ways to pay you. The property's value can go up, that's appreciation, and it can generate a steady stream of cash flow through rental income. See, gold's value is really all about perception and basic market forces. It's seen as a safe haven, a place to run when economies get a little shaky or inflation starts to creep up. So, investors buy it to preserve their wealth for the long haul, hoping to sell it for more than they paid. It's a very passive, long-term play on its value just increasing. Real estate's value is so much more tangible. You can touch it, you can stand on it. It's tied to the physical land and the building itself. You can improve it with renovations, and its location is absolutely everything. This physical nature is what allows it to generate income and serve as a home or a place of business. But look, no investment is perfect. Every single contender has a weakness. So for round three, let's look at the downsides. We're talking about the risks, the responsibilities, and yeah, the headaches that come with owning each of these. While gold is super easy to trade, its price can be a real roller coaster. It's known for rapid and sometimes pretty dramatic price swings based on global news and what investors are feeling that day. Real estate markets, on the other hand, move much more slowly. Price changes tend to be gradual, which makes it a more stable, though obviously less liquid, asset. And just think about the day-to-day of owning them. Gold is the ultimate set-it-and-forget-it investment. You buy it, you store it somewhere safe, and that's it. Real estate. Well, that can feel like a part-time job. You've got to deal with tenants, repairs, taxes, insurance. Trust me, the list of responsibilities is long. This table really lays out the trade-offs perfectly. As you can see, gold is more volatile, but requires almost no management. Real estate is less volatile, but demands active, ongoing work. Even how you protect them and finance them is totally different. With gold, you're insuring against theft, while with property, you're insuring against damage, and you can use a mortgage to buy it. So, after 3 tough rounds, who's the winner? Well, the answer isn't a simple knockout. It's really about deciding which champion's strengths line up best with your own personal financial goals. To find your winner, you have to ask yourself some really honest questions. First, do you need a steady paycheck from your investment, or are you okay waiting for long-term growth? Second, how important is quick access to your cash? Third, Are you looking for a hands-off asset, or are you willing to roll up your sleeves and put in the work? And finally, how much can you realistically afford to invest upfront? So, if your answers led you toward needing liquidity, a simple, hands off approach, and a low barrier to entry, then gold might just be your champion. It's absolutely perfect for those who want to set it and forget it, or for folks who want a safety net against economic uncertainty. But if you're looking for an asset that can actually pay you every single month, something tangible you can see and touch, and you've got the capital and the willingness to manage it, then real estate could be your clear winner. And let's not forget, the ability to use leverage, a mortgage, that is a huge advantage. Ultimately, there's just no single best investment for everyone. The true champion in this fight is the one that aligns perfectly with your life, your goals, and your personal comfort level with risk. It's a completely personal decision, not some universal rule. And that leaves us with one final thought. Maybe the goal isn't to pick a single winner in some knockout fight. Perhaps the smartest strategy of all is to see them not as opponents but as a team, using both gold and real estate to build a stronger, more diversified portfolio. That's some food for thought, isn't it?